Hello everyone, I am Vighnesh Gupta and we at Aditya Birla Sun Life Mutual Fund are launching two new products. The Aditya Birla Sun Life US Treasury 1 to 3 year bond ETFs fund of funds and the Aditya Birla Sun Life US Treasury 3 to 10 year bond ETFs fund of funds. These funds will invest in ETFs which hold US Treasuries as underlying assets. So why should one look at investing in US Treasuries at this moment? Multi-decade high Fed funds rate and the potential for expected rate cuts in 2024 has created an attractive opportunity for investment in US debt. The yield curve has repriced sharply higher and offers both high accrual and the opportunity to gain capital gains as and when rate cuts begin. Inflation has fallen significantly from the highs. As inflation falls further, we will see rate cuts begin perhaps sometimes in 2024. Also, the yield differential between US, which is rated at AA+/AAA, and India, which is rated at BBB-, is at multi-decade lows. Furthermore, investors have the opportunity to hedge themselves against any INR depreciation. In fact, any INR depreciation would enhance INR returns from USD debt securities and amplify portfolio performance. The INR has depreciated against the US dollar in 12 out of the last 15 years and at a CAGR of 3.9% over the last decade. Holding exposure to US dollar can also be a great hedge against future USD expenses or liabilities. Let us understand what led to this up move in yields. So 3 years ago, we were all faced with COVID-19 and the entire world economy shut down. Central banks and fiscal authorities responded with unprecedented monetary and fiscal stimulus amounting to trillions of dollars. This supported demand at a time when supply chains were constrained. So high consumer demand met constrained supply chains and this led to a spike in inflation. Central banks initially dismissed this spike in inflation as transitory. However, that did not prove to be the case. We then had the Russia-Ukraine conflict, which led to a further up move in commodity prices and a further leg higher in inflation. Consumer demand was supported by strong labor markets and excess savings from all the stimulus that we saw during the post-pandemic years. Central banks finally responded and we had the most aggressive tightening cycle that we have seen in decades, and yields have risen to multi-decade highs. Going forward, we expect that rate hikes are either already over or that rates are very close to their peak. Inflation has fallen significantly but remains above the Fed's 2% target. We believe that the level of rates is extremely restrictive and will eventually lead to a slowdown in the global economy. As the global economy slows down further, inflation will return to target and this will allow the Fed to cut rates to support the economy. The other important reason to consider US Treasuries as an investment avenue is because of their diversification benefits. Indian investors are heavily skewed towards domestic equity investments and global investments account only for 0.5% of total mutual fund investments. So let's understand what are the key diversification benefits of US Treasuries. First of all, investors are able to protect the dollar value of their assets. We have discussed how investors can protect their portfolios from any INR depreciations and in fact benefit from it. The second factor is protection against any risk-off episodes. We have seen how geopolitical conflicts have risen over the last year or two with Russia-Ukraine and now Israel-Hamas conflict both leading to increased geopolitical uncertainty. Furthermore, any global economic slowdown or recession will actually allow investors to benefit because US Treasuries rally when you have risk of episodes. Furthermore, in terms of asset class diversification, investors can diversify their portfolios by getting fixed income exposure and geographical diversification because these securities would be US Treasury securities. In terms of route of investment, we believe that mutual funds are a great option for investors because they provide a hassle-free way for investors to invest in US Treasuries. Investing via mutual funds will not be a part of the LRS cap for the investor. There would be no cap on the investment amount, and it will also not attract TCS obligations for the investor. Now, coming to the two products that we are launching, we believe that the 1 to 3 year product is ideal for investors who want to keep duration risk and therefore volatility low while continuing to enjoy high accrual and hedge themselves against any INR depreciation. On the other hand, the 3 to 10 year product is ideal for investors who want to lock in these higher yields for a longer period of time, reduce reinvestment risk, enjoy capital gains as and when rate cuts happen, and hedge themselves against any INR depreciation.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। स्कीम संबंधी सभी दस्तावेजों को ध्यान से पढ़ें।